Want to bring in Dan Geltrude. He is a CPA at Geltrude and Company. And Dan, thank you for joining us here today. With all this crypto wealth that has exploded in this year, we know the IRS wants to take their share. So how is this going to play out?
The IRS certainly wants their share. They want their share of everything. So let's keep this in mind. When you think about cryptocurrency from a tax standpoint, you really have to look at it more like it's a stock, like it's an investment, as opposed to it's a currency. And the reason for that is because it is taxed like it's a stock. So let's break that down for a moment. Every time there's a transaction of crypto, it triggers a taxable event. Now, you may not owe tax. You may transact in cryptocurrency and actually produce a loss. But you still have to keep in mind that whatever you do related to crypto has a tax implication. Now, how do you figure this stuff out? Well, it's no different than when you have a stock. When you purchase a stock, it has a basis. And it's that basis that determines whether there's going to be tax or not. Meaning, if you sell it or transact in it above the basis, there's a gain. And if it's below the basis, then there's a loss. So that is basically the ground rules on taxing cryptocurrencies.
And then I want to ask you, sir, crypto tax gifts have been booming. They're up 580% year over year. How does that affect liability?
I'm sorry, crypto what?
Crypto tax gifts that people make before the end of the year. Yeah, they're soaring, they're booming, they're up 580%. So just wondering, how does that affect tax liability?
Sure. So what happens there is when someone gifts crypto, it is similar to gifting a stock. So whatever the giftor paid for the crypto, that basis, remember, the key is the basis, what you paid for it, that basis gets transferred to the person who is receiving the gift. Now, that person takes on the basis of whoever gave it to them. And now, anytime they're transacting in crypto, it could potentially create the same thing, a tax gain or a tax loss. Now, the reason why people will have a tendency to gift crypto is because they believe crypto has an enormous upside, and that's the whole point. So you're gifting it so that you're not going to have that tax gain taxable to you, and you pass it along to someone else who presumably is going to hold it for a while.
And is there anything investors in crypto should be thinking about at this time of the year, as opposed to April 14th or April 15th? Any kind of snags that could come about just because we have all these new reporting requirements? People aren't used to reporting their crypto holdings or their crypto profits or losses. What should people be keeping in mind as we head into the new year?
Well, the one thing that you have to make sure of is that you are tracking, again, that keyword basis. So my suggestion to everyone is to make sure that you have an app that will track all of these crypto transactions. Why? Because when you get to the point of having to file your tax return, you need to know what happened with your crypto. Because again, every crypto transaction produces a tax event. So if you do not track your basis in your crypto, you want to know what happens? You're going to end up paying a lot of money on April 15th because it becomes all taxable if you don't know the basis. So my message to everyone related to crypto is make sure you are tracking that basis, unless you want to have a really big surprise for your cryptocurrency transactions come April.
I like that. Know your basis. And I'm sorry, go ahead, Karina.
Sorry, just only a couple of seconds left. I just wanted to ask you, how much more closely is the IRS focusing on crypto earnings at this point?
They're looking very closely at crypto these days. That's why on the first page of your tax return, right at the top, they ask the question, Do you have cryptocurrency? Did you transact in cryptocurrency? It's a yes or no. So those tax returns get segregated right there. Who has crypto and who doesn't? For purpose, ultimately, of being audited down the line. A lot of people try to get away with not reporting crypto transactions. The IRS doesn't like that. So yes, there's a lot of skepticism and critical looking at cryptocurrency.
That's right. Never underreport and never don't report. Thank you for those wise words. And coming back here, Dan Geltrude, CPA at Geltrude & Co.